Hi, Larry Berman here, and here's what's on my radar this week.
Omicron, 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 Omicron.
So the uncertainty around the virus variant here is having an impact on markets. But earlier in the week, Jerome Powell, chairman nominated to be the next chairman, changed his tact a little bit. And now inflation is a bit more than transitory, and now they're willing to taper a little bit faster. Kind of interesting, 2 weeks ago it was transitory, and then he gets named or renamed to be chairman, and now it's okay to say it's not. So, the Fed's been politicized, and it's going to be a factor, going forward. It's really quite a challenging position the Fed's put us into here, and I think the inflation's a little bit more sticky. So, the market a few days ago prices out the Fed, then it's back in, and so we're in this period of uncertainty and volatility around Omicron. And we're not going to know, unfortunately, for a couple of weeks until we see hospitalizations, ICU rates. And what we heard today out of South Africa and some of the other South African nations is that the virus spreads way faster than Delta. So that's a for sure. We don't know the sickness levels yet. The sense is that it's going to pierce through some of the existing vaccination protocols. We heard from Moderna and Pfizer. They're working on already adjusting, but it would probably be end of February or March. 100 days was the time frame we kind of heard, where they would have 1 billion vaccines ready to go. That uncertainty, we should, from a technical perspective, see the S&P 500 test the rising 200-day and the September lows. And why do we say that? Because when we look at this chart of the percentage of the S&P 500 names that are already below their 200-day, we see that market breadth is already there. So the understanding that the broad market does that is logical. And what we need for that to happen is large cap tech to start really selling off. And we're seeing some of the leader names there starting to break trend and trend lines and so forth. So bull and bear pick of the week. For weeks now, be careful on large cap tech and companies that don't have earnings visibility. We're seeing the ARC names get slaughtered. As we get into tax loss selling, there's going to be some real good opportunities there. Keep that on your radar here. Be cautious for now, but there's going to be some names that are 50, 60, 70% off their highs in the tax loss period here, and there's going to be some opportunities there. So, ARC K, $80 in that range, 75. Wouldn't surprise me in the next few weeks if we got to those levels, which would be down another 15, 20%. From where we're sitting here late on Friday as an opportunity, but I think we can be a little patient there. What do we like on the long side? Outside of that, there's all kinds of tax loss opportunities this time of year, and I think that's where our hats need to be. The medical marijuana names jump out to me for sure. Some of the precious metals, silver in particular, looks very attractive here. So have a look at your favorite silver name, SIL, if you're looking at the ETF side. And again, just be defensive and cautious on markets here until we get to test some of those more important support levels to validate the trend. Have a great weekend, everybody. We're in holiday season now. And guess what? I just became a grandpa last week. So really happy this time of year and these days. And wow, hard to think of myself as a grandpa. Have a great week, everyone, and a great holiday season.